Hello, and thank you for joining me for part two of our volunteer income tax assistance training for the federal tax return with VITA Services for West Michigan. My name is Amanda Grover, and I'm the program coordinator, and I'll be taking you through this information. So we've gone through the basics of a tax return and some of the intake and interview information. Now we're going to jump into the actual return and some of the basic concepts for filing the tax returns. We're going to review the tax return setup itself, exemptions, as well as the filing status for the taxpayers that we'll see at our VITA sites. So in a nutshell, what was some of the best information that I was told when I first started learning how to do taxes and when I took this training is to really get familiar with the setup of the 1040 form. The 1040 form is the basic form that we use within the software that all of our taxes are working off of. So they're split up into a few different sections. The first is income, and then there's deductions, or as they're called on the tax form, adjustments. Once you put in the income and take away the deductions, you'll have the taxable income and the tax rate that the taxpayer is being taxed at. And then you add in the credits as well as the tax withheld, and hopefully you'll come up with a refund. If there's not a refund, you'll see the amount due that the taxpayer does owe. So this is a basic snapshot of a 1040 form. This is from 2013. However, the forms really don't change much in the federal tax return from year to year. When you go into the tax software, a lot of the information and a lot of the math will be done for you, but you have to know where to put the information and where it goes, what it is. So you'll start off at the basic data screen, and as it's called in the tax software, it's the main info page. And that's where you'll work with the taxpayer, and you'll go with the intake and interview form and go through all the questions and make sure the information looks correct that you're entering into the tax form. So the first thing you'll do is you'll start with the main info page. One of the first things you'll come across where you have to make sure that the right decisions are being made for the taxpayer is looking at filing status. Filing status determines the amount of eligibility the person has for different tax credits and tax rates. It's basically indicating what the marital status of the person that's filing is. And when we talk about marital status and we talk about filing status, we're taking the information from the last day of that tax year. So in 2015, on December 31st, what was the marital status of the person that we're talking about? We don't ever consider if the person married halfway through the year or anything like that. We're looking at the last day. So there's 5 basic filing statuses you can choose from on the federal tax return. It's married filing jointly, married filing separately, if the people or one person is married that you're doing the tax return for. If a person comes in and indicate that they're single, there's a couple of other options too. So they can be single, but they could also possibly be eligible to file for head of household or qualifying widower. Let's jump into some of the specifics on each of these filing statuses. So first we're going to start with married filing jointly. It's pretty basic. On the last day of the tax year, so in 2015, the couple has to be married. So you combine all of their expenses. They don't file separate tax returns and indicate that they're married on each of them. It's one tax return. You combine all of the income on it, and that's for both spouses. This is the most advantageous filing status, so it's really encouraged that if a couple is married, that they use married filing jointly. There is the other option of married filing separately though, and they do have the option to pick. Most people don't pick married filing separately if they are married, but just know that that's an option. This is the best standard deduction rate, so it's $12,600 for the upcoming tax year. And it by far, like I said, is the most advantageous by offering the best tax rates and the biggest tax credits available to the clients. So there is married filing separate though. So if there is a married couple, they do not have to file married filing jointly. If they do married filing separately, that's exactly what it sounds like. There's a tax return for each of them, and the couple's income is not combined. So there are a couple of reasons why people may want to file separately. Without getting too involved in a person's or people's personal affairs, we do try to explain the different tax advantages. And in fact, if somebody comes in and indicates that they were married on the last day of 2015, but that they were separated, I ask them if there's any way to resolve the issue so that they can at least file their tax return together. They don't necessarily have to come in at the same time. They can definitely sign off on the tax return separately. They don't even have to see each other, but it is most advantageous for a couple to file together. What it does if they do the married filing separately status is it is a much less advantageous exemption amount, tax rate, and it makes them ineligible for a lot of the important credits that we try to emphasize for our clients and that we try to make people more aware of. So the single filing status is pretty easy. You couldn't have been married at all. So if you were married and you just had been separated, that means you're married filing jointly or separately, but you have to be completely single. So you could not be married at all on the last day of the tax year. You have to be legally divorced if there was a divorce situation in 2015 that had to have taken place by December 31st. If you're single, that's just that. It's just you. There's no dependents. And the standard deduction rate for the 2015 tax season will be $6,300. Again, these amounts for the standard deduction, and what that means is that that's the amount that's reduced from the taxable income. And you don't have to know the math or know these numbers for any reason. I'm just giving you an idea as to how much the filing statuses vary in reducing the taxable income. But the tax software does all of that work for you. So it's not anything you have to memorize or typically anything that you even have to reference. Next, there's head of household, and this is probably the most confusing filing status. So I want to make sure that I emphasize that, and you'll hear me go through this a couple of times just to make sure that you understand the filing status and the different things that come up with it. So head of household is designed for singles with dependents. So what that means is there's a single taxpayer, it can be male or female, and there has to be at least one dependent in the home. If that's the case, the taxpayer pays to keep up the home and pays for all the cost of the home, then they can file what's called head of household. And what that is it's a little more advantageous than filing single. And it's probably the most complex because people have the most questions about it. But if you make sure to use your reference material, your publication 4012 has a few different decision trees that can really be helpful. And then just make sure you're going through your practice problems. Your certification exam also provides some really complex issues with this. So if you can work through those, then you'll definitely be ready for whatever comes into the tax sites. I do just want to preface this also by indicating that at the tax sites, it's usually pretty straightforward, and sometimes you might have to have a few conversations around these topics, but there's usually not a big surprise. It is, however, very important that you do understand these concepts and that it makes sense. So if you have any questions, make sure you refer to me, Amanda. I'm happy to sit down with you anytime to go over this information in more detail if there's any confusion. So with a single taxpayer and the qualified dependent, so it has to be a relative in the home, and with keeping up at least half the expenses of the home, the person is eligible to file the head of household filing status. Again, a lot of people coming to the tax sites have filed the same status for the previous year and understand the concept and understand the filing situation. There's also qualifying widower. This is not very common at all, but I do like to make sure that everyone understands this status. A qualifying widower is for somebody who has a spouse who died. So if the spouse died in that current tax year, so for example, with the upcoming tax year, if there was a spouse that died in 2015, then they would do the married filing jointly for 2015. But after that, if there's still a dependent in the home, then they can file what's called married filing or do the qualifying widower filing status. With the qualifying widower filing status, you can claim qualifying widower for 2 years following the death of a spouse. So, for example, in the 2015 example I just provided where the spouse died that year, they would claim qualifying widower if there were a dependent in the home and if they had not remarried. They would qualify for the qualifying widower status for 2015 2015, or I'm sorry, for 2016 and 2017 tax years. So for 2 years, they can claim this qualifying widower filing status. And what it is it's a little bit more advantageous than the head of household filing status. So again, there has to be a dependent child. The parent has to keep up with the cost of the home, so at least half of the expenses of the home, and they cannot have married anyone else within that time. If they do get married, obviously they'll use the married filing separately or filing jointly filing status. Exemptions. So I do like to just cover exemptions. There isn't a whole lot of math that's involved with exemptions. There's not a lot you need to know, but I do like you to understand the concepts. The tax software takes care of basically everything that's involved with the exemptions for our tax returns. But it is good to understand exemptions and the role that they play in calculating taxes. So each person that is filed on the tax return receives a reduction of $4,000 towards the taxable income in the home. There are exemptions that can change the taxpayer's filing situations and that can increase their deductions. We're going to go through all of this right now. So there's a personal exemption for each of the people on the tax return as well as each of the taxpayers. So people sometimes ask me if they're married filing jointly, do they just get one exemption for the couple? No, each person on the return gets an exemption. And then any of the dependents also get an exemption. So we want to make sure that there is one exemption per taxpayer. So an issue when this comes up, when a person will get no exemption, is if they are being claimed on another tax return. For example, if a family comes in and they indicate that their son is working, he's 16, he's going to want to file his own tax return, but he does not get to claim his exemption on the tax return. I'll go through some of the examples and show you where you check off a box and it just takes the exemption from the person so that they can't file it. If a tax return is submitted to the IRS and it has already been claimed as an exemption on another tax return, the return will be rejected. So we'll know immediately within 24 hours. So it's not a big deal. It's just something to point out. So again, there's an exemption for each of the taxpayers that are married filing jointly, and then there's an exemption for each of the dependents. There's two different types of dependents. So there's people that, there's family members that are supported by a relative, and then there's non-relative dependents, and we're going to go through that. They each get their own exemption, but it's just good to know. So for dependency exemptions, there's a couple of things. In order to be considered a dependent and eligible to make the taxpayer a dependent for the head of household filing status, there's a few different tests that the dependent must pass. They must pass the relationship test, the age test, the support test, and the residency test. So the relationship test is just that. There's a list in your publication 4012 book. In order to be considered a dependent of somebody, they have to be a relative or some sort of descendant of a relative. So it might be a grandchild, a stepchild, anything like that. It can be counted as a dependent as for a family dependent where there is a relationship. So in order to be considered a dependent, the person must also be under the age of 19 if they're in grade school. And if they're in college, the person can be claimed on a tax return. The dependent can be claimed on a tax return until age of 24. After that, the person must claim themselves. They can't be considered a dependent just because you're providing half of their support. Also, if a person is totally and permanently disabled, that definitely qualifies them. They don't have to submit to any sort of age test. There's also the support test. A child can't provide half of their own income. So if they provide half of their own income or more than that, then they can't be claimed as a dependent on the taxpayer's tax return. There's the residency test also. So if they're going to be claimed on the tax return, they have to have lived with the taxpayer for more than 6 months. The qualifying exemption tiebreakers. So every now and then We'll have a couple that comes in, either they're unmarried or they split up and they were never married. There isn't any sort of a divorce decree. They say that the child spends half the time with each parent and that each parent provides half the support and that it's right down the middle. If that really is the case, you'll want to use the tiebreaker rules. They're all listed in publication 4012, but typically I just let the parents know that the biggest tiebreaker rule is whatever parent has the higher AGI is supposed to claim the dependent. So there's a couple of other things to look at if they earn exactly the same amount. I've never really had this come up. A lot of the time there's rules in divorce decrees or there's arrangements that parents have already made. So just be aware that there are tiebreaker rules and that those are listed in the 4012, although you probably will not have to reference those. Every now and then, though, you may see something a little weird. Somebody may indicate to you that they only have their kids on the weekend, and then they hand you this children's social security card and indicate that they'd like to file for them. If that's the case, you'll just want to make sure that that's the arrangement. A lot of the time, there may be an arrangement and a divorce decree, and some people refer to that. So just be aware that there's different circumstances with everything. And as you go through practice examples and as you go through tax returns with different situations, you'll just get accustomed to people's various living situations and custody situations as well. So there's a few issues that come up and we get rejected returns because of exemptions being claimed and people being claimed on returns that they shouldn't be. The biggest one that we see is that somebody will have a rejected return because they took their personal exemption when really they weren't entitled to. So it's really common among college students. They may not live with their parents or may not talk to them and see them all the time. So they assume that their parents are not claiming them when in fact their parents are actually claiming them and the parents are actually entitled to claim them. So what I do in these situations is I just explain how the tax law works and how the rules work and let the client take it from there. So if the client is adamant that they want to file for their exemption, even though most of the time this is not advantageous to the person, to the college student, but if they're adamant that they want to file it, then print out the document for the client, give them a call and let them know arrangements as to how to file the tax return. Also, sometimes if there's separated parents or parents that aren't married and don't have older children or they haven't really established how they're going to do taxes, sometimes the same child will be claimed on the tax return. Siblings may sometimes accidentally or intentionally, whatever whatever the situation is, they may file for like a parent that they both take care of. So it just indicates that there hasn't been clear communication about who is actually claiming the person. A dependent supports themselves if they provide half of their support, but if they receive Social Security, especially if it's a disabled adult in the home, a lot of the time that doesn't mean that they're paying half of their household expenses. So even though they get Social Security, they can still be considered a dependent. So these are just a few things that come up. Again, they're not hugely common, but they are probably the most common situations that we see at the tax sites. If you have any questions with anything that comes up, or if there's a rejected return in your on your homepage when you enter into the software, go through it with a site coordinator, and it will really help you understand the various tax situations. So there's dependency exemptions for qualified dependent relatives, like I indicated. Um, they cannot be claimed on anyone else's return. There's income limits, so the dependent's gross income is less than $3,950. There's also the support test, so the taxpayer has to have provided more than half of the support for the dependent. And then there's the residency test, so they have to have lived in the residence for at least 12 months. They can be any age though. And that's for somebody that is a qualified dependent relative. So it may not necessarily be an immediate dependent, but somebody that lives in the home. If that's the case, again, the biggest distinction that makes them a dependent is that they've been in the home for 12 months and that the taxpayer has provided more than half of their support. So having a dependent, like I said, especially with a dependent relative, doesn't actually make them necessarily head of household. They have to be, again, you'll have to look at the different residency test, age tests, the different tests you do for each of the filing status. I will say that the difference between single and head of household is probably the most tricky. So you'll want to make sure to focus on this as you're doing your practice examples in the workbook 4491, as well as looking through the certification exam. So again, just to review a few things, there's head of household, which is designed for single parents with dependents. And that's the case more often than not. It's a single taxpayer with a qualified dependent person, and they pay more than half the cost of keeping up the home. A few other things, there's the qualifying dependent child. So they have to be under 19, or if they're in college, 24 years of age. They must be related to the taxpayer. They must have lived with the taxpayer for at least 6 months, and they cannot have provided half of their own support. The qualifying dependent relative is that taxpayer or the person that's living with the taxpayer, and they can't have earned $3,950. They're usually unrelated, so they're not necessarily a direct relative of the taxpayer. They can't have earned $9,350. They can't have lived in the house any less than 12 months. And this does include any, they don't have to be directly related to the taxpayer. And then head of household, again, it just has to be a single person. They have to have provided support for any dependents for at least 6 months and keep up more than half the cost of the household expenses. So you might be asking, what's next now? That was a lot of information. What you'll want to do is make sure you go through your 4012 and go through some of these decision trees and really get your head wrapped around some of these concepts that I've talked about. If you have any further questions, as always, feel free to contact me. I'm happy to work anything out with you over the phone or in person. We can meet and talk about specific examples if you'd like, or just to go through the information again. There's plenty of exercises, so make sure you're referencing your 4491W workbook, and that'll go through a lot of information with you. Make sure you watch the next webinar, and also there's some information and modules on the TaxWise software. Make sure you're referencing that. The module for TaxWise is really helpful, and at this point, it might be helpful to start watching some of those modules as well. There's definitely a lot of supplemental material, so if you have any questions, make sure you ask. As always, we look forward to the next module we go through, and we hope to see you soon.